G'day folks, welcome back to Pete's Investing. Today is March 19, 2024. This is the silver technical analysis. So we're still in an uptrend across all timeframes, although we look like a possible reversal in a shorter term. So we'll see how that goes. Plus we're introducing a new table in each of the videos, and I'm going to be covering today's video on silver, of course, but you can see there on the other instruments, including some FOREX, it shows the monthly, weekly and daily trends. So silver today, we're looking at all time frames showing bullish movement, but there may be a reversal in play. So first I've got the weekly, the daily and the hourly, and at the bottom here we've got the ADX 25, which shows bullish movement on the weekly, bullish on the daily, and just broken down into a bearish signal on the hourly. On the CCI 150, which is our main trend indicator, but also a divergence indicator, you can see there a nice big bullish movement to the upside above these moving average bands. This indicator, by the way, is attached in the description below if you want to learn how to draw that on your charting software. On the daily, you can see here it's actually just about touching that band of moving averages, which means it'll become in a neutral stage soon. So it's still bullish, but you can see there it's just probably turning neutral as we speak. On the hourly, it's already broken to the downside. I'm not showing you the monthly here, but if I do go on the monthly size, you can see there that's also bullish, but I'm just covering the weekly, daily and the hourly in the summary. Now in terms of weekly movement, you can see there we've been in this range for some time. It did actually bounce from that Fibonacci range, and it's actually bounced down from that 61% level, which happens to be the 25.92 key resistance area. So just be aware of that, and we may see it further decline from this area as well. On the daily, I've got here a Fibonacci expansion. You can see that it went as high as the 61% of that expansion level. But again, I'm sort of focusing on this CCI 150, and it's just about, actually it is touching it right now. So that's turned neutral as we speak. And on the hourly, you can see there, I did draw this trend line previously along those bottoms. It's actually broken through that. Now that could just be a false break like it did back here. But in this case, we did have a bearish divergence versus the price chart, lower highs on the CCI, and that's just a continuation. So that is continuing in a downtrend on the CCI versus the price. And again, that could just be a little retrace before making further upside. But again, I've got these indicators, these arrows indicating a potential reversal. That's also covered in the description below in terms of understanding how to do the multiple indicator, which I've developed recently. But if I zoom out, you can see there those, doesn't always pick the absolute bottoms, but it does pick those cluster of red arrows generally with a divergence, and then it picks a lot of the lows as well. Not always. You can see there is giving you a lot of bullish movement, but eventually did reverse, and then it started being a bit more stable. So it's not a perfect indicator, of course, but no indicator is, but it's giving you a few highs and lows we can trade upon. As a trading idea, what I've got here is the daily chart, and we use that as a indicator to show where we go long. So you would have gone long where that CCI 150 broke above the moving average bands. And here I've got a back test of going long positions on the average down approach, and we only trade long when the Heikin-Ashi on the price chart is bullish, and go short when the Heikin-Ashi is bearish. In this case, we're only taking long trades. Remember, the monthly, weekly and daily are long positioning. So this is the average down approach, and you will probably just close out the position once that starts breaking into that moving average band, and that's a stop loss approach. So the average down approach has generated 3,900, and the stop loss approach has generated $580. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button, hit that notification bell, and we'll see you in a future video.